Welcome to Mass Financial and Geopolitical from Frontier. Thank you for stopping by. I'm grateful. My macro thoughts start with a headline I saw on Bloomberg. There have been some big, mysterious moves, and I think mysterious is exactly the right word, in the markets lately. There doesn't seem to be any single driver that would explain all of these moves, though plenty of analysts are pointing to the unwinding of consensus positions such as trades built around the expectation of continued deflation and quantitative easing in Europe. Others have highlighted more technical factors and illiquid markets that have amplified the moves. Whatever the reason, the recent seismic activity in these markets has no doubt been painful for some big investors. And then they put up 6 charts. The US dollar has been weakening, it has. Euro area sovereign debt has been selling off, causing yields to rise. Look at that chart as well. Very interesting. Asian stocks, which have been in a bull market for years, have been feeling the pressure, with the Shanghai Composite Index closing lower in the last couple of sessions. Meanwhile, oil has been rallying and extremely sharply, with WTI crude moving above $62 on Wednesday morning. Copper, long considered a bellwether for the global economy, has been surging higher recently. And when you look at all of that, you will appreciate its mysteriousness. Errol, the frontman of Hot Chocolate and one of Britain's most successful musicians, dies. And one of my favorite Errol songs was It Started With a Kiss, and I'll put up that link if you get a chance, listen to it. Petapixel tweeted, "This moon trail was shot with a 37-minute exposure." Rather beautiful, I thought. Moving on to political reflection, psychological defeat is the final defeat. We are not worried, President Assad said, and now, God willing, the army will arrive soon to these heroes who are besieged in the Jisr al-Shugur hospital to continue the battle to defeat the terrorists, he said in a comment broadcast on Syrian state television. He was speaking at a school in an undisclosed location at an event to commemorate Syria's Martyrs' Day. In the rare public appearance, he was surrounded by throngs of people chanting in support. Security officials held back surging crowds. And I'll put up a photograph. Seldeep tweeted, "Bashar Assad speaks on Martyrs' Day in Damascus." Robert D. Blackwill and Ashley J. Tellis have written a very interesting piece in the Carnegie Endowment, revising U.S. grand strategy toward China, and I think this resonates with being the real deal. It has become something of a cliche to say that no relationship will matter more when it comes to defining the 21st century than the one between the United States and China. Like many cliches, this statement is true, but not terribly useful, as it tells us little or nothing about the nature of the relationship in question. Some point to history and argue that strategic rivalry is highly likely, if not inevitable, between the existing major power of the day and the principal rising power. Others challenge such a prediction, emphasizing more the impact of domestic, political, economic, and social developments within the two countries, as well as the potential constructive influence of diplomacy and statecraft. Robert D. Blackwill, Ashley J. Tellis, authors of this Council Special Report, reach a conclusion considerably closer to the first of these two propositions. China represents and will remain the most significant competitor to the United States for decades to come, they write. Judging the likelihood of a long-term strategic rivalry between Beijing and Washington is high, they also argue that China has not evolved into the responsible stakeholder that many in the United States hoped it would. To the contrary, Blackwill and Tellis see China as having adopted a grand strategy for itself that is meant to increase state control, over Chinese society and beyond its borders to pacify its periphery, cement its status in the international system, and replace the United States as the most important power in Asia. What flows from this assessment is nothing less than a call on their part for a new grand strategy toward China that centers on balancing the rise of Chinese power rather than continuing to assist its ascendancy. The two authors acknowledge that this new policy cannot be built on the bedrock of containment. They also say that policymakers cannot simply jettison the prevailing policy of integration, but they do advocate what they describe as crucial changes to the current policy in order to limit the dangers that China's economic and military expansion pose to US interests in Asia and globally. Stated somewhat differently, the authors recommend a new US policy of balancing China that would in effect change the balance of current US policy, in the process placing less emphasis on support and cooperation and more on pressure and competition. There would be less hedging and more active countering. And I think that is already the case, actually, in point of fact. Currency markets, the euro popping up to 113.85 when I checked, the dollar index around the 94 level, Japanese yen 119.25 last, Swissy when I checked last 0.9134, the pound was around the 152.20 level, Aussie 0.7956, India rupee weaker at 63.935, South Korean won 1090.95, Real 303.31, Egyptian pound 763.14, and the rand 1208.29. Dollar index has been obviously on the back foot, as we described in that series of moves. I'll put up a 3-month chart, euro dollar, very strong, key T-junction and resistance 113.90. Secret shorts, nameless naysayers shake markets in Twitter age. They have methods of communicating views instantly to potentially millions of people, said Marshall Front, Chief Investment Officer at Front Barnett Associates and a 40-year-old Wall Street veteran. There are a lot of people with a lot of money who will move capital based not upon an idea, but upon an algorithm tied to one word. So if someone comes out and casts aspersions on management, they're not waiting around. Commodity markets, 1187.85. I'll put up a 6-month chart of gold. Crude oil has been on a tear. Last, when I looked around the $61 level, I'll put up a 5-day chart. I like the story. Never mind oil. Iran's about to shake the world pistachio market. Iran is ready to return to the global commodities market, flooding it with fresh supplies and risking a slump in prices. Oil, question mark, possibly. But there's a second industry that could be even more disrupted by a nuclear pact between Iran and the West, pistachio nuts. Iran has far more clout in the market for cocktail nibbles than it does in crude trading, while it ranks only as the world's 7th largest oil producer. The Middle Eastern country vies with the US to be the biggest pistachio grower. As with oil, Iranian sales of pistachios to the US and Europe have been hampered by sanctions. Coming to Africa, Zimbabwe has asked the West for cash for the first time in a decade. And they've been reaching out. There's been a rapprochement between the likes of the IMF and the Zimbabwean government, particularly under the finance minister. John Kerry warned on Monday, this is the quote I couldn't recall, that he was deeply concerned about President Nkurunziza's decision to stand again, which flies directly in the face of the Constitution, he said. And then that was part of an interesting story about how a judge, Silveri, said the court's judges had come under enormous pressure and even death threats from senior figures, which he refused to name, to rubber stamp the controversial candidature of the president. And his judges had to flee the country. Almost 40,000 have fled Burundi amid this crisis, and I wrote about this over the weekend, Burundi's spillover risks. Burundi's police, according to a report, a tweet on BBC Africa, used live ammunition to disperse more than 200 protesters in Bujumbura. So it remains a powder keg. Mozambique war prospects recede as Renamo tones down threats. This is what was being reported in Bloomberg. A potential threat to stability is a change of heart by Renamo's leader, said Alex Vines, head of the Africa Programme at the London-based Foreign Policy Research Group Chatham House. Dhlakama easily flip-flops, said Vines. He may seek compromise today, but soon may revert to threatening a return to force. As we saw in the April 2013 to July 2014 armed clashes, this can be disruptive for central Mozambique. And then, if you read that article, then I came across this on Reuters. One thing is certain, the country is sitting on a barrel of gunpowder, said the Renamo parliamentarian Jose Mantegas. Angola, the only traces of thousands of Angolan Christian sect members who were camped in these hills are burnt-out vehicles, shacks pocked with bullet holes and bloodstains in the soil. The details of a police raid on April 16 in the remote hills of central Huambo province have been fiercely contested, sharpening the divide between the ruling MPLA and the main opposition party UNITA, which fought on opposing sides in the 27-year civil war that ended in 2002. It also raised awkward questions about the government in Africa's second largest oil producer, which spent $6.5 billion in defense in 2013, the biggest slice of its budget, and more than any other country in sub-Saharan Africa. The Angolan police said 13 snipers from the light of the world were killed during a raid to capture the sect leader Jose Calupetega, a popular anti-authority preacher who says the world will end on December the 31st. Calupetega was arrested during the raids in the Sumi Hills, 25 kilometers south of Kala in the central Angolan highlands. A UNITA stronghold. He was paraded in front of the media in a yellow prison jumpsuit on Tuesday. I'll put on that photograph that Reuters posted of him. And it's very murky, isn't it? South African oil share is up 8.82% year to date, but has come off the highs of 54,000. Exports of black seedless grapes increased to 482 million cartons last year. This is South African exports, compared with 195 million cartons in 2010. Dollar rand, when I looked last, 12.08.29. Egyptian pound, last time I checked, 763.14. Egyptian stock market down 0.78%. Nigeria is looking to slash its fuel subsidy following the oil price slide. Buying as much as 90% this year because government revenues have been hit by the slump in prices, oil prices. They did try to end subsidies in 2012, doubling the price of a litre of petrol overnight to 150 naira from about 65 naira in efforts to cut government spending and encourage badly needed investment in local refining. But of course the move angered citizens who see cheap pump prices as the only benefit they derive from living in an oil-rich country, and led to 8 days of nationwide strikes. The government later reinstated part of the subsidies. It's quite a bold move. Nigerian oil shares up 2.32%. Ghana Stock Exchange is up 1.81% in 2015. President Museveni told the Associated Press, "If anyone has been bullied, it is me." In fact, Museveni said of his country at large, smiling at the mere suggestion of authoritarian rule, "There is so much freedom that it is almost a problem in itself." If you never watched The Mind Speak with the President, please do. That link is on Rich Wrap-Ups. Safaricom, I went to the results release this morning. I did an interview with Bob on the live feed, and we'll be getting a disc of that, and we'll publish it imminently. They reported that the full year revenue accelerated 12.9%. Full year profit before tax up 31.9%. Full year profit after tax up 38.5%. Earnings per share up 38.5%. Dividend per share hiked 36.2%. And they're sitting on cash of 14 billion shillings. Customer numbers were good. They were up 8.3%. Mobile data customers active in the last 30 days up 21.2%. M-Pesa customers up 14%. Voice revenue increased 3.7%, but it was a game of two halves. Stronger growth in the first half, only 1% growth in the second half. SMS revenue up 14.8%. Mobile data revenue, look at this, up 59.2%. M-Pesa revenue up 22.8%. That's 20% of total revenue now. Non-voice service revenue, everything other than voice, is now 42.1% of total revenue from 37.4% previously. They've launched a 4G network, and they're saying they have 4.3 million customers on 3G-enabled devices, of which 3.4 million were smartphones. I put up a selection of tweets. Bob tweeted 30% revenue growth, net profit up 38%. I tweeted at one point brilliant full year numbers, which they were. Mobile data lifting off big, which it is. 8.3% increase in subscribers, 12.9% increase in revenue. I stopped tweeting to ask a question, and a fellow called Wanjala tweeted. Ali Khan stopped tweeting just in time to cajole the rest of the crowd to ask investor questions. They hiked the dividend 36%. That's a statement in itself. And they're talking about launching this big box, which is Bob is quite bullish about it. And, he reckons that it's going to be a big thing in about 18 months' time. These results beat the already high bar of expectations by a wide margin. The non-voice revenue expansion to 42.1% of total revenue year on year was good, and then bear in mind that accelerated 27%. Dividend hike of plus 36.2% is in the final analysis a powerful statement. The share price is headed higher, but there's some light profit taking right now. Interesting procurement managers survey released by CFC Stanbic showed a sharp climb to a 4-month high of 56.2 in April, up from 53.8 in March. That's interesting. Kenya shilling remains on the back foot at a 3.5-year low. Last time I checked, 95.298 trading. Nairobi all share up 6.507% year to date. NSE 20 still in negative territory, down 0.6061%. John Kerry took a lot of photographs when he went to visit the Daphne Sheldrake Elephant Orphanage. And I like this one of him feeding a baby elephant during his visit. Yesterday at the stock market, Kakuzi firmed up 1.69%. It's up an eye-popping 66.66% year to date. Safaricom through this morning had closed at a record. It's light profit taking, but it opened this morning up 24.911% year to date, and I think after some light profit taking we're going to go up again. Kenya is firmed 0.72%. TPS Saharan firmed 0.72%. Very few sellers here. We could see it starting to improve. KCB, of course, reported their first quarter results. Traded weak yesterday, a lot of profit taking, which has followed through today. But I like these comments from Joshua. I think banking needs to be seen not just as traditional lending. It's more about the financial services continuum, which we don't see all the time. KCB closed 2.419% lower yesterday. Equity Group was weaker. National Bank was firmer. Britain, that's been on the bounce since closing at a 2015 low not too long ago, up another 3.225%. ARM was firmer, and then Crown Paints, which reported profit before tax slumping 55%, but then decided to do a bonus of 2 bonus shares for every one held, and of course that's been what's lifting the price higher. It's in fact rallied since the release of what were quite poor results. Once again, thank you for listening. I do appreciate the support. Thank you for stopping by.